In property, there's an awful lot of legal stuff that goes on. When you're dealing with solicitors, you need contracts for certain things, and it can be quite confusing if you don't know what you need. So I really want to take the time to go through all the different types of contracts that you might need within property, yes, within deal sourcing, but also in the kind of deals you're gonna do. So the first one I want to talk about is just simply your deal sourcing agreement. So the one you have when you sell a deal between yourself and the investor. It's basically made of two parts. One is a non-disclosure agreement, so they can't talk to other people because you've given them some sensitive information about a deal that has value to you, your finder's fee, and a non-circumvention agreement. It's basically saying they can't cut you out. So that is known as your deal sourcing agreement, your finder's fee agreement, your whatever you want to call it, right? It will also include some basic terms and conditions for you as a business, how you do business, what your refund policy will be, if there's any deductions for delays and all that kind of stuff. That is just a straightforward contract. So if you want to sell a deal to an investor, you're going to need something that basically says, here are the terms of the agreement that we're making, why you are paying me some money for a deal. Nice and simple. You might need some form of other agreement if you're doing any form of like hands-free or hassle-free or passive style investment setup type option, whatever you want to call it. Basically where an investor pays you to set up their deal for them, manage the refurb, manage conveyancing, financing, all that kind of stuff. You need a separate contract for that as well. Now these are very, very basic agreements. You can get some decent templates online if you go around looking for it. Otherwise, do it properly and just ring a solicitor, tell them what you want to do, and ask them for a contract that outlines everything that's within that. You're looking to speak with a corporate lawyer, someone who deals with commercial contracts ideally. So different solicitors specialize in different things. Surprise, surprise. Some do litigation, things like divorces, all that kind of stuff. Some people will do conveyancing where they buy a house for you, and others will do commercial contracts. And of course, there are other sections as well. So the commercial contracts kind of lawyer is the person you want to speak to for literally all the stuff we're going to be talking about in this video. Next kind of contract, if you will, that will come up that you're probably going to want to get used to, especially if you're doing direct to vendor or off-market deals, is a memorandum of sale or a heads of terms or a memorandum of understanding. They'll basically mean the same thing. Now, officially speaking, this isn't a contract. It's not a legally binding piece of paper that sums stuff up. What it does do though, is it gives a basic understanding and a sign of intent from both parties from either side, which you can then hand to your legal teams in order to draft a fully binding agreement. If you're gonna do a lease option agreement, you're gonna start off with a heads of terms. So basically, what's the address? Who's the vendor? Who's the buyer? How long is the option for? How much are you paying every month? Basic stuff like this. When you go to buy a house, an estate agent will ask you for ID docs after you put an offer in, they want proof of funds, all this kind of stuff, and then they draft what's known as a memorandum of sale. And that says who's the buyer, who's the vendor, who's the house, how much is it being bought for, and then that goes off to either solicitor, both on the buyer side and the vendor side, and that basically sums up everything they need to know so they can get moving with the conveyancing. So a heads of terms or memorandum of sale, memorandum of understanding, all the same kind of thing. It's a basic agreement signed between two parties usually, which sums up in plain English what it is you're trying to do. Something you then give to a legal team to create a full draft of a fully binding agreement. That is something you're going to be using fairly often. Estate agents will draft them for you if you're doing something like a sale. They'll do it again if you're doing something like a rent-to-rent agreement. They'll draft initial heads of terms for you, and then obviously they'll go through and draft the rest of the contracts. But if you're doing something direct to vendor or you're doing it off market, then you're going to want to do something yourself. You have to draft this up yourself. It is super, super easy. Literally just Google memorandum of sale and you'll find the kind of stuff that you're after. The next one that's used most commonly is rent-to-rent contracts. Now you have two options here. You can do company-led agreements, you can do management agreements. They're very, very similar. One is a bit more of a commercial lease style thing. That's what your company-let does, and it allows you as a company to rent the property and then use it for your employees and potentially some other use as well, like Airbnb and so on. And a management agreement is basically you saying you're going to manage the property on behalf of the landlord for a fixed amount usually, or you give them a certain amount of the cash, etc., etc. Again, they're two very straightforward agreements. If you're using a letting agent, you're probably going to go for a company-led agreement. If you're going direct to vendor or direct to landlord, it's more likely to be a management agreement. But you can use either. And if you're not sure, go ask a solicitor. That's what they're there for. You ring them up and say, look, this is what I want to do. What agreement do I want? They'll tell you what it is for free, and then they'll charge you to draft it up, which I think is perfectly fair. But at least that way you know what agreement you need, and you know that you can have someone draft it up for you if you need to, and they'll tell you roughly how long it'll take. The next one is probably the contract I use most, if I'm honest with you, and that is loan agreements. I freaking love loan agreements. They're super, super easy. Nearly everybody understands them without needing to get legal teams involved, and you can use them again and again and again. And of course, if you're using a loan agreement, it usually means someone's giving you a fat wad of cash so you can go and do some deals. Now, if that doesn't feel good, I don't know what does. So a loan agreement is, in essence, saying that party A is going to give me a little bit of money and for a fixed period of time and a fixed return, and these are the different securities that will be offered or the different collateral that's offered. These are the terms of the agreement, what happens if I don't pay, all that kind of jazz, right? So that gets drafted up. And you can get different types of loan agreements that are more and more secure, more and more detailed, depending on what you want. I would recommend you should have a conversation with the person who's going to lend you the money, find out what they want to do. Ultimately, every time I do one of these, both parties are legally represented. So their solicitor represents me, solicitor represents them. They do all the negotiating between themselves to make sure that we're happy with the terms that are there and that their respective clients, so me and the investor, are adequately protected, and we've got everything in there that we need to be happy with the deal. Loan agreements are awesome. Make sure you have some loan agreements on file somewhere. You know, it can really bail you out if you're struggling for finance for a deal at a last minute and you need to raise a little bit of money in like a really short space of time, like 24 or 48 hours. There's no way you can go to a bank and get something through that quickly. But working directly with people and having loan agreements ready, you can get that money you need in time to do the deals that you need to do. It wouldn't be the first time that we've had to do some last minute fundraising for one of our deals so we can get it over the line literally on completion day, and it's the loan agreements that have bailed us out. So loan agreements, probably my favorite. Second favorite would be joint venture contracts, right? So similar to someone giving you money, but this time they're probably sharing in the risk of the project, or they're sharing in the project. Maybe they're offering more than just capital. They could be offering expertise or connections, or maybe they're taking on some form of responsibility. Even if they're not, doorbell's rang. Hey, man.
Hey, buddy, all right?
Good, thanks.
Got two for you today.
Do you just squiggle?
No, picture.
Perfect. Cheers, man. But even if they're not going to be taking on some form of responsibility in the deal, probably you are. Now, joint venture agreements, unlike the other ones that we've mentioned, every single time are bespoke. The reason we do this is the deals are very different from one deal to the other. They're in different areas, they've got different exits, different build plans, different terms. They probably have different financing arrangements. They have different numbers of investors involved, so they're gonna have different kind of clauses that need to be included within that. So every time we do a joint venture of any sort, whether it's a big deal or a little deal, we get bespoke contracts. Generally speaking, these tend to be known as shareholders agreements or investors agreements, where we have an SPV company, the share structure represents the ownership and the profit split, and then we have a contract in place between the shareholders, hence a shareholders agreement, which determines who gets paid what and who's responsible for what and how everything works depending on how the deal pans out. So again, they are bespoke. Again, both sides are legally represented, so everyone knows exactly what's going on. Everyone's got legal counsel and advice on what it is that they're signing and how everything goes together. You might be looking at a lease option agreement. Well, if you're doing one of them, you've already drafted the heads of terms. Just ask your solicitor to draft one up. They're gonna be bespoke as well. But to be honest with you, they're the main agreements you're gonna need. So at any other time in business or in property, if you're thinking about a contract or whether or not you need a contract, if it's not one of the things I've mentioned, it's highly unlikely that you're going to need one. The only other time I can possibly think where you might need a contract if you're going to co-source with someone. Co-sourcing, very simply, if you don't know what that is, you find a deal, maybe you haven't got investors yet, or your current investors don't want to buy the deal that you've got, send it to someone who's already a deal source, who has another list of investors, they can sell it for you, and then you split the fee between yourselves. You might want agreement there. Now, if you want an agreement there, find out what terms you're going to be working on with the deal source you want to send a deal to, draft a little heads of terms, plain English, I will sell deal for this, you get this much split. Really basic stuff, don't overcomplicate this. It doesn't need to be legally binding. Give that to a solicitor, they'll give you a quick contract. It won't take them very long to draft up. If you want to do that, that's a very easy way of doing it, but a lot of people when they co-source don't use contracts. There's a trust element, and to be honest, in deal sourcing especially, if you start screwing people over, your reputation will follow you, and people will start posting about it online. And believe me, people will find out very quickly you're not very trustworthy. And take it from me as a deal sourcer who works with co-sourcers, you know, I want more people coming to me to help me send deals. It helps me make more money, it makes them more money. Like, I don't want to kill that business stream, I want to keep it alive. You know, so I'm self-motivated and self-incentivized to keep that thing working in a healthy business win-win style situation. So if I'm not going to do that, then hey, there's no benefit to me there. So think about it like logically in terms of whether or not you need contracts. You don't always need them. Sometimes you do, sometimes you don't. But that is literally a full list of all the contracts you could possibly need for all the deals you're going to be doing in the next kind of year or whatever, especially if you're getting started. If you want to send deals to me so we can sell them, there's a link below with literally everything you need to know. When you get paid, how much you get paid, what we're looking for, where you need to send them. So check out the link below. It's got everything you need to know, and I cannot wait to see the deals you send through. Until next time, take care.